Hello and welcome to the Wall Street Petting Zoo podcast. My name is Robert Coburn, and this is the Petting Zoo's weekly segment, This Week at the Zoo. This Week at the Zoo is our news segment where we break down some of the major events that occurred over the course of the week, review our previous week's stock picks, and list off a couple of stocks we are focusing on in the next week. Chris is out this week at an academic conference, so I will be guiding you solo this week on the news from Wall Street. We started off the week with news out of China that substantial progress was being made between China and US in the trade talks, which on top of the strong earnings report from last week, helped keep the momentum going in the Dow, the Nasdaq, and the S&P 500. Early on in the week, Boeing, McDonald's, and Travelers dipped, with the latter two reporting weaker than expected results. Travelers, a property and casual insurance industry stock, dipped 8%, its worst day since the last recession. Boeing, along with Caterpillar, both reported abysmal quarterly numbers on Wednesday that badly missed the expectations of the analysts. In the middle of the week, we saw how sometimes a good quarterly earnings report doesn't necessarily mean a bump in the stock price, as we mentioned last week. Snap, aka that app all the kids, maybe your kids, use to share pictures and videos, Snapchat, that disappear after they are viewed, their third quarter results were better than estimates. However, investors started to bail on poor guidance. When guidance starts to look bad, short-term investors and some long-term investors tend to move to greener pastures. The American Petroleum Institute reported Tuesday night that oil inventory is twice as large as analysts expected. However, the EIA reported Wednesday morning that they had radically different numbers. And because of this, Chris, my co-host, capitalized on this and pivoted from a short oil fund into a long oil fund, making about 5% profit as prices surged. And as we close out the week, despite the bad quarterly earnings report by both Boeing and Caterpillar, the stocks quickly rallied higher at the tail end of the week, with other companies like Microsoft, Intel, Tesla, Alibaba, Goodyear, Visa, just to name a handful, also posted moderate to big gains, where companies like Amazon, 3M, Lockheed Martin, and Facebook just about broke even, recovering most of the losses they incurred over the middle of the week over positive news on the China trade deal being brokered, and partly on optimism that another Fed rate cut would occur by the end of the year. Chris believes that the futures market's odds of that 90 to 95% that there will be a Fed cut, they're too optimistic, and he believes the numbers will drop early next week. Many news outlets reported at the end of the week that they expect the rate cut to come as early as next week. The biggest losers this week include PG&E, which continues to stumble around its handling of its current bankruptcy situation, and the second coming of planned power outages across California, with one Citigroup analyst speculating that the probability that the stock price could go down to zero. Other losers this week include Anheuser-Busch, the folks behind alcoholic beverages such as Budweiser, Beck's, Michelob, and a handful of other top brands dropped 9 points, back down to where it was priced 6 months ago on the news that they missed third quarter sales and earnings estimates. And Twitter, which has been riding around $40 a share since last April and reached as high as 45 at one point, finally came crashing down to about 30 at the close on Friday after failing to meet analyst expectations. Twitter is one of the stocks I like to watch because it has a nice up and down trend that bullish investors like Chris enjoy. Looking back at the stocks from last week, unlike most stocks that reported this week that dipped down lower and then recovered, Ford stayed down this week. Ford is in the middle of restructuring globally, and for long-term investors like me, this dip means it's probably a good time to double down on my investment and hope that they can right the ship and be a dominant force in the car industry again. Tencent, which also ended the week like Ford, however, they didn't report any earnings this week, but there has been growing pessimism in China regarding the stock, where on the Chinese exchange, the stock has been on a downward trend since almost surpassing 400 points in the Chinese market back in April. Reports are also stating that this pessimism may also be fueled by China possibly revising a law to control young people's online gaming activities, which is the primary target demographic for online games is young people. And just like Ford and Tencent, Nokia followed suit, posting its worst two-day performance in 19 years after reporting that their profits for this year and the year after that would be lower than previously expected due to higher than expected cost and pricing pressure on 5G products. If Nokia can turn this stock around, then this is the perfect stock to buy for the long haul after this massive price drop. So it's probably a good time to buy in once it bottoms out. Activision Blizzard continues to hover around the $55 mark amid controversy. However, with the launch of Modern Warfare on Friday, it appears to be doing well on the surface. With BlizzCon around the corner, this will continue to be a stock I provide updates on, as this is one of the stocks on the forefront of the esports industry. The esports industry is speculated to be worth more than $1.8 billion by 2022, just shy of doubling its current revenue of $1.1 billion. To put that into perspective, the NFL is estimated to be worth about $15 billion. On top of the stocks previously mentioned, the next week I will be watching is the iShares Transportation Average ETF. This ETF tracks the U.S. transportation sector, so airlines, roads, trucking, with high-speed rail becoming a hotter and hotter topic with regards to alternatives to planes and automobile transportation. It is probably a good ETF to track for long-term investors like myself. It is currently on an uptrend, but based on the trends, it may be coming back down for a good time to buy in. I have my alerts set to 177 at the price point, and it's currently priced at 195. Thank you so much for listening this week. If you liked the podcast, don't forget to hit that like button, share it on your social media accounts, and if you don't already have a Webull account, use our referral link in the description to help support us. If there's something you'd want us to talk about, leave a comment for us down below or tweet us at WSPZoo. We will catch you next week at the zoo.